uncertainty on both political and economic fronts. For more, let's speak to George Buckley, Chief UK Economist at Nomura. He's joining us live now from London. So at this point, what more should the British government be doing to provide reassurance to businesses?
Well, it's just spent, I think, £100 million on the most expensive government advertising campaign to try and tell businesses what they should or shouldn't be doing. The problem is a lot of businesses haven't actually started the process yet. And I think there is a lot of concern that they think that the process is going to last too long. It's going to take too long to get in place what they need to do. And they're still not convinced that we're going to end up in a hard Brexit. There's some glimmer of hope that what Boris Johnson says about possibly getting a deal might actually come true. And if it does, then all of their preparations and all of this effort that they would have gone to would be for naught. So I think there are a lot of businesses which aren't fully prepared, and that probably will remain the case even going into October and towards the end, even if we're still looking at a no deal.
And Boris Johnson earlier said the chances of a deal with Brussels has actually been rising. But in order to get a deal, you need to have no deal on the table. When you heard his speech, do sort of businesses and do you feel that there is the possibility that we will see a deal between the UK and the EU?
Well, I think when you look at what economists are forecasting, that there are a lot of economists, but not by no means all, assuming that a deal is the most likely outcome. Now, the probability is very uniform, to be honest, at the moment, between no deal, a deal, and no Brexit, because they're really the three main outcomes that we could have. And when you say the probabilities are uniform, what we mean is that we really don't know where things are going. It's exceptionally difficult. But you have to base your forecasts on one of those options. Now, if you look at what the Bank of England said, it's tried to base its forecasts on a deal of some sort. The problem is it conditions those forecasts on market variables, such as you were mentioning before about the bond market, gilt yields, for example, and what the market's expecting for rate cuts and sterling. Now, all of those financial market variables are pricing in quite a sizable risk of Brexit, so a hard Brexit, that is, and therefore you've got this very odd combination of a forecast which isn't really a proper forecast because it's based on two different, completely different outcomes.
And how important is it for Boris Johnson to strike deals beyond the EU, for example, with the United States?
So one of my favourite statistics is the distance between London and some of the key non-EU countries versus the distance between London and our EU trading partners. The latter, on average, is probably about 800 miles. The difference, or the distance between London and the top four non-EU trading partners is 4,800 miles. There's a big difference. And when you look at these gravity models, what they tell you is that distance is really important about how much trade you do with these countries. So that the risk is that, yes, while it could be quite important, the US is a very important trading partner for the UK, it can be only limited relative to what we might potentially lose from leaving the EU with no deal, and the countries that we have been used to trading with, which are exceptionally close to us geographically.